timely conversation. It is a very necessary one. Just a few weeks ago, I had the opportunity to speak at the annual seminar for judges, where I shared insights into the psychological and structural dynamics of Ponzi schemes and their alarming evolution in Nigeria. Today's session builds on that conversation. Ponzi schemes have become one of the most damaging financial threats to our society. According to the Nigeria Interbank Settlement System (NIBS), over 5 million Nigerians have lost more than 300 million, but 1.3 billion, but I dare say about 2 trillion to such schemes in the last decade. Of course, we know about the infamous MMM scheme that affected over 3 million people with an estimated loss of exceeding 18 billion. And of course, not to mention the more recent CBEX with an estimated loss of about 1.3 trillion. These schemes are not just economic crimes. They are psychological operations that prey on the trust, financial desperation, and the lack of investor awareness. It thrives on behavioral triggers such as bias and the fear of missing out, most especially. Now, why does this webinar matter? With the passage of the ISA 2025, Nigeria has a renewed legislative arsenal to combat financial scams. The new framework strengthens enforcement tools, plugs regulatory gaps, and provides clearer definitions and penalties for pyramid and Ponzi activities. The webinar today will focus on two pivotal themes: understanding the psychology behind Ponzi schemes, that is, how they manipulate human behavior and why they remain effective despite clear warning signs. And number two would be examining the legal and regulatory innovations of the new ISA 2025 and how these empower regulators, operators, and the public to respond decisively to Ponzi schemes. We are privileged today to be joined by a distinguished panel of thought leaders and regulators who will shed light on the issues. Ms. Frana Chukwuogo, Executive Commissioner, Legal and Enforcement, Securities and Exchange Commission, the SEC, whose leadership in regulatory enforcement is shaping a safer investment landscape. Mr. Austin, as we call him, Agenta, Chair of the FMAN's Ethics, Rules and Regulations Committee, whose experience in fund governance will illuminate the preventive role of licensed fund managers. And of course, Adekemi Obosanya, our moderator, who, as she had introduced herself, is a respected investment professional who will guide us today's discussions with both expertise and insight. I would like to thank all of you for your kind time. Now, we have a shared responsibility. Let us be clear. Ponzi schemes are no longer confined to back alley fraudsters. They have become sophisticated, tech-enabled, and increasingly bold, masquerading as crypto platforms, WhatsApp investment clubs, or influencer-backed wealth opportunities. Combating them requires collective vigilance. From regulators, investment professionals, law enforcement, judiciary, and the media, to proactively educate the public, enforce compliance, and build lasting trust in our financial system. This webinar is more than a discussion, it is a call to action. Let us emerge from today's session better informed, better aligned, and better equipped to protect Nigerians from financial exploitation while strengthening the legitimacy and transparency of our capital markets. On behalf of FMAN, I would like to thank our speakers, our collaborators, and every one of you in attendance. Together, we can make a great market ecosystem where trust thrives, integrity is non-negotiable, and fraud has no safe harbor. Thank you and welcome again.
Thank you very much. Thanks for, I think you've really done a great opening with that speech, and we're grateful for your leadership in Fund Management Association of Nigeria. I think I'll do an introduction of our very first speaker, and I'll read his profile so we'll have an understanding of the in-depth he has in this subject matter. We call him Austin. His name is Augustine Achenta, and he's the head risk management and compliance at Investment One Financial Services. And he has spent almost 20 years in the financial industry, which includes banking, consulting, and fund management as it is now. He started his career in 2007, and he had worked in an array of financial institutions. Very notable one at that. But his current role, he moved in there in 2011. In 2011, he moved to Financial Data House Limited, which is FDHL. And on his 7 years at the firm, he built various roles, which include head of sales, senior advocates, financial market advisory. He eventually became a consulting manager with specialization in financial and enterprise risk management. He joined, he has a first degree in geology from the University of Benin, and he has professional certifications, which include certificates in international investment management from CISI UK, and certified lead implementer of information security management system, which is what we know as ISO. And he's also a certified risk manager from the Risk Managers Associations of Nigeria. In addition to those many caps, he is the head of the Rules and Ethics Committee of Fund Managers Association of Nigeria. He will be taking us on the very first topic on this webinar, and I'm sure you do justice to it. It's on the psychology of Ponzi schemes and understanding Ponzi schemes under the new ISA, just like previously introduced. I'll leave the stage for Mr. Austin to start on his session. And I want to ask you if you want Dari to share your screen for you, or you'll be able to do it by yourself.
Let me see. Try to share from this side. Good morning, everybody.
I just wanted to mention, that you have 30 minutes for the session, and we'll take questions for about 50 minutes. Yeah. All right.
Thank you very much. Okay, so I'm sharing now. Confirm you can see.
Yes, your slides are visible and very clear.
Thank you very much. All right, so I'll start. So good morning, everybody. So we're talking about the psychology of Ponzi schemes and understanding basically the new ISA 2025. I'll be discussing more about the psychology Ponzi scheme and the alternatives that are offered in our industry, fund management industry, and what FMAN offers, or at least FMAN members offer. So today, this is our table of contents. It's a very brief presentation, 30 minutes. We'll be looking at brief introduction, understanding Ponzi schemes, factors that have influenced Ponzi schemes, impact on the capital markets, and alternatives to these get-rich-quick schemes. I felt that the best way to introduce this presentation is to just go through what we have in dailies. A lot of them, I believe most of them are from this year, or maybe a few from the previous, maybe 2024. And we can see here the kind of damage that Ponzi schemes are doing to Nigeria. Just going through, you can see here from The Guardian saying that over 1.7 trillion naira has been lost, to Ponzi schemes over the past 9 years. Something on Kano says over 20 billion lost 5 years. Here we're talking about CBEX, over 1.3 trillion lost as the digital trading platform disappeared. Also, I'm seeing here anguish about CBEX and the paradox of Nigerian Ponzi scheme. I believe this is a good way to introduce what we have, what we're discussing here today. And here the nation says very recently, July 15, just a few days ago, it says that the SEC moves against 79 suspects.
I think Mr. Austin went off. Daria, are you there? Can you still hear him?
Yeah, I'm here. We'll reach out to him to see what the problem is.
I say apologies, just give us a minute. Let's try to reach him. I think after he's still on the call though.
Hello?
Yeah, we can hear you.
Oh,
Yeah, welcome back.
Yeah, sorry. Nigeria happened to me.
Sorry.
Yeah, apologies to everybody. Let me share once again.
Okay.
Yes, I was just going through my introduction.
Yeah.
All right, please confirm you can see.
Yes, but please put on slideshow.
Okay. Please confirm.
Well, I can't see it on slideshow. Daria, can you?
Not yet.
Okay, let me try again. I'm trying it. Please confirm.
Yes, fine now. Fine now.
Okay, great. Apologies, everybody. So I'm just talking about the history. In the 90s, we heard about the likes of Planwell. 2020s, Nospector ruled the waves. There were a lot of other small players, but I believe Nospector was one of the biggest at the time. There were things like Mana on Mana and others as well. MMM, of course, was the biggest one in the 2010s, and of course, CBEX is the major guy that we've heard about in the 2020s, although there are a lot of other players out there right now. I'm sure if we allow people to list some of the schemes they've heard about, we will take more than an hour to go through the list. That's just to show you that these guys are operating. So the question is, why exactly do we call it Ponzi? Of course, named after a guy called Charles Ponzi in the 1920s United States. So the same thing, it was promising 50% return within a few months. Now, 50% will not seem much for us in Nigeria, but when you're offering somebody 50% in US dollars, that's a lot. And then you use the funds from new investors to pay fake returns to earlier investors. So basically, with this, we can actually sort of define what the Ponzi scheme is. Basically, it's a fraudulent investment scheme. I believe that it's important for us to know about that word. It's an investment scheme, but a fraudulent one that offers returns to earlier investors which are paid using capital of new investors, rather than using legitimate profit earned through business activities. Now, I recall. Hello.
Please,
Go on, Mr. Austin.
Austin, please unmute yourself and go on again. Kindly unmute, Mr. Gata.
Sorry, Mr. Austin, please proceed. But you need to unmute yourself. I think we're muted all.
Yeah, I
Yeah.
think well
Yeah.
muted. Okay. And let me try to share again. Right. So I was talking about the kind of returns that are promised. 50% return in USD is a lot, even today. You can get that when you're investing in certain types of stocks in the maybe US stock market, but you cannot really get that in guaranteed return schemes. So basically, there's an element of risk. Like we always say in risk management, higher risk, higher reward. But he was promising, basically guaranteeing returns for people at 50%. And now that is one of the ways that you know about the Ponzi scheme. Returns are guaranteed for things that are way kind of returns that's above the market. In other words, there is really no kind of investment, at least approved investment, that is, that can give you such returns. It doesn't just make sense. Okay. Now, so what are the features? I'm having discussed this. What are the features of Ponzi schemes? Now, these are usually what you call unregistered or supervised sponsors or operators. What are unregistered schemes, basically? We know that in the Nigerian financial markets today, we have the capital markets and the financial and the money markets, right? The money markets traditionally are those that are within 0 to 1 year. And in Nigeria, they're regulated by the Central Bank of Nigeria. Okay, so when you say money markets, that's where the bank's dealing. When you're talking about things like fixed deposits, even treasury bills, that's money markets. Capital markets usually are things above 1 year. So you're talking of 1 year to maybe 100. In some countries, you can have bonds that are up to 100 years. Usually in Nigeria, maybe 30 years. And people who are supervised usually are regulated by either in Nigeria at least, the Central Bank of Nigeria or the Securities and Exchange Commission. Ponzi schemes are not regulated by either of these regulators, and that's how you know what this Ponzi scheme is. Yes, you have other regulators in Nigeria, financial system, you have the insurance people, and so on and so forth. But when I'm talking about investment schemes, usually they are regulated by either the Central Bank of Nigeria or the Securities and Exchange Commission. So that's one feature of a Ponzi scheme. They are unsupervised or unregistered. Also, there's no investment portfolio. What is an investment portfolio? That's usually a basket of assets. So you could have securities like treasury bills, you could have bonds, you could have stocks, and so on and so forth. Now, Ponzi schemes do not have investment portfolio. Why? Because usually they use the monies from new investors to pay the old ones, and that continues to allow them to grow and grow and grow until a point where everything blows up, and those who are sponsors eventually run away with your money. Also, they rely on the growing stream of investors to create an illusion of profit. This is very important. There's always an illusion of profit. What is an illusion? I'm talking about, in simple terms, magic. Illusion basically is to deceive you, to give you a sense of something that is not real, that is real. So, for example, for those of us who have had conversation with people who have invested in Ponzi schemes, I remember when some years ago, the days of Nospecto, the days of MMM, I actually had conversations with friends of mine who were investing in this, and they will tell you that usually the early investors usually get their returns. And a friend of mine, a very good friend of mine, told me, oh, he had invested. I think back then, this is maybe invested 100,000 naira, and he was able to get a return, that way more than double his money. And then guess what? He put that back into the scheme, and then eventually everything went bust, and then he got nothing. And that's how they usually operate. they rely on the growing stream of new investors to create an illusion of profit. Usually those that go in on time, they get return, and guess what? They become ambassadors of those schemes. Very, very unfortunate. They also use investors as recruiters. And so what you will see usually is that income payout is usually tied to recruiting new investors. So it is not just enough for you to put your money in and get your money out. No, you must bring in new recruiters. So they use this what you call network marketing effects. And we've seen it not just from financial products. They usually happen in other kinds of products, body care products, and so on and so forth. I'm sure a lot of us know what I'm talking about. And so you must bring in new investors to be able to get your money out. So back in the day, what they used to do, they create this maybe website. You can log in and put your maybe your username and ID, and you can see your earnings, but you cannot take it out until you fulfill the necessary next step, which is to bring more people. And then what ends up happening is you see people bring their family members, their friends, even up to their church members, pastors, so on and so forth. And then when the thing goes bust, you are the one they come after. And that's another very important feature of Ponzi scheme. They also claim to invest in some businesses that are non-permissible in the financial markets. So usually for those of us that are in financial markets, when you want to get a product approved, usually you will list the kind of assets that you invest in. These are what you call permissible assets classes. Usually they tend to invest in non-permissible to create that illusion. So they will tell you, oh, I'm doing a commercial business. Oh, there was a time where what was doing in Nigeria was farming business. They tell you, oh, we have a farm in Kogi State, in Benue State. We are growing yams and so on and so forth. And so that was the scheme. Some will tell you that they're operating commercial business, such as transport business, so on and so forth. Oh, we're transporting goods to Kano, and we're making a kilo, So they use this to create an illusion. And they're very quick to adopt technology. That's one thing about these schemes. They are usually very flexible, versatile. They adopt technology quickly. So a lot of them now are even using Bitcoin as payments and so on and so forth. So please let us beware of these kinds of schemes. And they offer high return. Again, very important. For us to bring you in, they have to create this illusion and kind of propose returns that are too good to be true. And there's a saying that if it's too good to be true, then indeed it's too good to be true. And then of course they have very short lifespan. They usually collapse quickly, few months, few years at best. And they usually collapse when the supply of new investors slows. There was a kind of scam that used to operate in the financial markets back in the day. They used to call it check throwing. Those days where checks, you could withdraw any amount of money. I believe that now in Nigeria you cannot withdraw more than 10 million naira checks, so you have to write multiple checks. Back in the day, you could withdraw as much as 1 billion naira, checks, and people used to throw checks. They have this good relationship with the bank. The bank is able to allow them to draw before clearing day, and they throw it around banks to create this illusion. So this type of scams in Nigeria have been existing for a long time. Then when one bank finally holds that check and refuses for the check to clear, all the other dominoes fall. That is similar to what the Ponzi's do. So what are the factors that influence Ponzi schemes? Economic instability, of course, in a place Nigeria, where the law of poverty is widespread. Economic instability and poverty are similar. So poverty is clear. People do not have enough to eat, but yet, talk for example, people that are ready to go to betting shops and cook. You will see that majority of them, and in terms of the number of people, are poor people. Yes, you may see people who are above the poverty line that invest. The numbers are fewer, but they may invest. They may put in more money. Let me not use the word invest. They put in more money, but in terms of the number of people, the poor people, where there's economic instability, that leads people who are above the poverty line to try to do something to make the kind of return that they expect. So I remember there's something that we in the industry noticed during the last crisis in Nigeria. I'm talking about the oil crisis of the 2015-2016, when a lot of people lost money and things crashed, and then a lot of people became very bullish in the type of returns that they wanted. Same thing happened during COVID. The markets crashed, investors lost money, and then investors started looking for more returns, and they were willing to do more risky things. And so economic instability actually leads to people to take more risk, and then they're able to patronize Ponzi schemes. Of course, lack of knowledge is clear, and lack of political will from African countries particularly. But we're happy that in Nigeria, our regulators are beginning to take the bull by the horn. What are the motivating factors for the sponsors of the scheme? These are people that are ready to scam us, and then the participants, those that are willing to subscribe to those schemes. For the sponsors, it is clear they are looking for economic return, opportunity to make fast, quick money. So a lot of people think, I can assure you that we are here in Nigeria, before we finish this program, in maybe in the next 90 minutes or so, one or two new Ponzi schemes would have launched. Why? Because people are looking for a way to make quick, easy money. Of course, there's greed. For it to happen, there has to be greed. It's the same thing that you're talking about betting. People are trying to bet is because of greed. And so people who bet, basically, they are also the kind of people that are willing to put their money in Ponzi scheme because you are willing to take a potential loss for a potential gain. Lack of knowledge is also very, very important because when you speak to a lot of these people who invest, there is this lack of knowledge, not understanding return of investment. A lot of people, when you have conversation with them, in fact, it makes it difficult for us in the industry sometimes to tell people that if you invest in a fixed return, you may be looking at maybe 10%, 20% a year max. But a lot of people will tell you that people are offering them that 10% a month or even more. Now, it's not possible if you're investing in qualified assets. It's not just possible. And then, of course, there's the ignorance of viable alternatives. There are viable alternatives out there. The returns are lower, but people basically lack the knowledge and understanding of how investment works. So the same thing. On the other hand, like I said earlier, greed is very, very important for subscribers, and lack of information about what is going on. And then failure or refusal to carry out due diligence on the sponsors. So before you put your money somewhere, please conduct due diligence. You do not just put your money where you do not understand what's going on. So that's very, very important, especially now we're having a lot of online businesses or online investment houses in quotes. Please try to go to your regulator's website to check whether these are approved houses. And it is okay for you to ask for a house for their license. Please do that. So that's about motivating factors. Now, why is this Ponzi scheme a threat to the Nigerian capital market? Why are we worried? Those of us that are players, why are we worried? After all, you can say it's not affecting us directly. We didn't put our money there, so why are we worried? Well, it actually impacts us directly mainly because of reputation. But there are also other reasons, okay? Now, money that is lost to Ponzi schemes basically is also less customers coming to us to invest. There's also the erosion of investor confidence because for anybody who is burnt by investing in schemes like MMA, there was another one called MBA Forex, Chinmark and others. Once that investor confidence is eroded, that's also a problem for us because we have to take more time convincing our customers, to come to us. Also, it affects the regulators because if there are issues in the market, reputational issues, then it affects the industry as a whole because our regulators, SEC, also has part of their aim to grow the market as well. There's also the distortion of investment flow. Yes, they divert funds, like I said earlier. And of course, this creates legal and regulatory backlog for our regulators because they have to conduct investigations. There's court cases that has to happen, and then they have to spend a lot of time dealing with all these things, trying to recover assets. That also takes a lot of time to do, and also money. So that also is a problem for them. So what has been the response to these threats being from our regulators? The ISA 2005 is a response, and our regulator will be speaking to us about that after this presentation. There's also the legal prosecution. Cases are currently being prosecuted, and in fact, more cases are being prosecuted as we speak. There's also investor education that's happening. So, for example, associations like us or trade groups, we are conducting events like this, seminars, webinars, to try to educate the general public. We partner with our regulators as well. Only recently, there was a seminar that was hosted by our regulator where we had people from Lagos State, some civil servants from Lagos State governments attended, and we have things like that are happening. The FMAN also has been having events, radio calls, television appearances as well. And also information dissemination by our regulators, the SEC, the central bank as well has been doing a lot of that as well. So that's how we have been working. So what are the alternatives to this get rich quick scheme? It's not enough for us to just say, oh, don't invest in Ponzi scheme or don't patronize Ponzi scheme. I won't call it investment. Don't patronize Ponzi scheme. So what are we doing? Basically, the Funds Management Association of Nigeria, basically, we are the trade group that to which all regulated fund management, approved fund managers in Nigeria belong. We have approved investment schemes, particularly mutual funds for retail investors. These are some of the best structures because they offer certain advantages, offer approved schemes, diversified investment classes, professional management. These are people who have gone to school, have certifications on how to navigate the market. Also, we provide safety of assets. Assets usually for fund managers are held not with the fund manager itself, with custodians, and we have trustees that provide governance so that the your investment manager cannot misuse your funds. We have different types of mutual funds, the money market funds, bond funds, equity funds, balance funds as well. So if you are interested in investing in one of such approved schemes, please contact FMAN. We have dozens of investment houses that provide different types of solutions that can meet the needs. If you want, different types of, if you don't want a mutual fund, we also provide portfolio management services for people who want customized portfolios for your assets. And so before you invest, what do? Ensure that your investment manager is registered. You can go to SEC website, or you can contact FMAN. You can go to the FMAN website to check. You can confirm that your product is registered, and before you invest in any mutual fund and any type of product, it has to be invested. Even our portfolio management services are also registered. You need to confirm that the account number that's provided by your fund manager for you to put your money in is actually that belonging to a custodian. It's a custodian account, and also please regularly check your investment, log in or visit the investment houses if you please. Thank you very much. And at this point, we'll take questions. Thank you very much. Kemi.
Thank you very much, Mr. Austin. I think we had a very insightful session. I think if left to me, I have a ton of questions to ask you, but I think I'll just leave it for our people on the call. I just dropped chats in the chat room for us to ask all our questions. So that before we let Mr. Austin go. So if you have questions, either you raise your hand or you drop it on the chat box. Dari, if I miss anything else in the chat box, can you please just help me? If you have questions. But I think before we start entertaining questions, maybe let me just see if I can bring out one or two of my own questions as well.
That would be fine.
Okay. And I know that our regulator will come up shortly to come and discuss how the new Investment and Security Act will sort of like strengthen the fight against Ponzi scheme. Yes. So I think that maybe we need to really also emphasize how to sort of like identify how a Ponzi scheme look like, and sometimes they can be very subtle. And I know I remember one of the times that somebody was trying to introduce, like you mentioned cosmetic during the course of the conversation to me, and I think one of the things I sort of like found very common around the fact that they are secretive about the underlying product they're selling. They can be secretive, and I asked one of them, what do you want to sell to me? And they can also mention the fact that, the underlying product is sitting somewhere in an unknown country, or rather a country that's so far away that you almost can't lay hold to. So, but the only thing that they used to say, just like you also mentioned, is the fact that, oh, this other person is invested in it, one other person is invested in it. So if this one person is invested in it, then you should be able to trust the person's judgment. And that's why we end up like, so like, okay, because Mr. A is there, let me also join. It must be that the person, Mr. A, must have done some form of some checks. So let me rely on that person. So for me, how do we, if my bosom friend comes to me with a scheme that's probably a Ponzi scheme, what are the 2, 3, 4 questions I should ask straight on that I can just put down in my notes now to say that, look, what should I, so for me to be able to decipher that is indeed a Ponzi scheme, because they can really be subtle and they play to our emotions as well, and people know. I thought they should help us answer that.
I agree with you. In fact, I'll give you a true life story. My early days in banking, this was before the financial crisis of 2008 or so. Same thing happened. There are a lot of schemes that were going around back then. And I had a very, very close friend of my colleague came to me to market this scheme to me. He had invested in it, and then, of course, he needed to bring like 5 more people so that he can go up the ladder and be closer to getting out his money. And it was emotional, of course. I won't call it blackmail, but it was emotional persuasion. It got to a point where I told him, you know what, I will give you the money. I believe it. I'm trying to remember how much, whether it was 30,000 naira back then. I will give you the money. I don't want, this is a Ponzi scheme. I told him, but because you are my good friend, it has got to a point where if I don't invest, it's going to affect our friendship. I told him, you know what, I will give you the money, but I'm not going to put my name down. I'm giving you the money because, my friend, if you make this money, keep it for yourself. You get? That was how, I was able to rescue my friendship against my own professional judgment. But that's how these things work. It's that bad that it can affect your family, can affect your friendship with your peers. And how do we know? How did I know that this was a Ponzi scheme back in 2007, 2008 or something? Because the kind of returns that were promised it did not make sense to me. I mean, I was someone that was in banking by then, and they were telling me that I can make 30% return monthly. Funny things, I'm like, this is not possible. So the kind of return that they ask you is out of this world. Then also, like you said, they will not tell you where the money is going to be invested. It's always something shrouded. Oh, we're going to do some business. Nospecto back then they were claiming they were doing oil and gas. You get, it was some oil and gas business. I don't know whether they were saying they were going to buy oil wells or something. So it's something crazy like that. And so that's how it's always, like you said, shrouded in mystery. Kind of returns they're asking for crazy. It's some new scheme that you've not heard about recently. They usually do not last more than 3 to 6 months. Some of them may get up to a year, but usually very, very short, tenured kind of thing. So that's how. If it's too good to be true, it's too good to be true. Ask your financial advisor. Hopefully, it's not the financial advisor that is bringing such schemes to you as well. Thank you.
And thank you very much. And I think you're very spot on. And I have 1 or 2 questions from Emeka and Jibrin on the chat. How do we know this Ponzi scheme and let the masses know about them? And I think I can take that to say that that's one of the reasons we're doing this webinar. And if you should not already do that, I think one of the things you can do is to follow us on all of our social media channels. I think I'll get Derek, can you just post all of our handles, and even for Securities and Exchange Commission. And if you follow Securities and Exchange Commission, especially in the last 1 to 3 months, they'll post names of schemes that some of them we even see on billboards. Yeah, and they will post name of schemes that you should be wary of. So I think the most important thing is for education, is for you to look out. And one of the easiest way, somebody introduces a scheme for you to you, go on Fund Managers Association of Nigeria's website and look out for members there and see if you see that scheme. Go on our app, which is the FMAN Hub on Google Play Store. You will see any scheme that is not there is probably not registered with SEC. Even on the Securities and Exchange website as well. If you go in there, if there's a scheme, that's the very first level of check, even if you don't know anything they're talking about. And some of them can even mention to you that they are registered with the Corporate Affairs Commission. That's not the only registration that is required. They can be registered as any kind of company, except you see their articles of association or memorandum of understanding us. You will not know the objective of their business. So they will typically, because I once asked one that a senior person that I know invested in. When I sat in the room, based on my role, the first person I asked them, which registry, who are you registered with? And the person said Corporate Affairs Commission. And I understand why anybody will fall into that, because they are registered as just a normal company, but just that they are not registered as an investment key. And for you to pull people's money together and invest on their behalf, you have to be a fund manager. And if you are a fund manager, you should be a member of Fund Managers Association of Nigeria, and you should be registered with the Securities and Exchange Commission. And even if you are operating in other investment, capital markets operations as well, you should be registered with Securities and Exchange Commission. And somebody asked question, and maybe I'll put that to you, Austin, around what can you say, that's from Jibrain, about networking business. They mentioned a name here, I've never heard of it before, 52U, etc. I don't know what that is. But networking business. What would you say about in relation to Ponzi scheme? Do you have something to say about that?
I know about that particular business they talked about. I know that the SEC recently published a list of 79. In fact, I even put that in my slide. 79. I saw it on dailies. 79 people. If you go to the SEC website, you even see some names. Almost on a daily basis, SEC is publishing where people report to SEC. SEC will conduct investigations and publish. So for that company right now, I don't know. But this network marketing is something that has been used in the past and is continuing to be used. And network marketing basically is what I just described that a friend of mine came to me. Is basically you go to your immediate network. That's why it's called network marketing. People you know, either from professional basis, home, religious circles, so on and so forth, and then you push it to them. That's the network marketing effect. And basically it branches out, and the next network, and then you are supposed to maybe get to the third level. So you have supposed to have brought people, the people after you supposed to have brought people to push you to the level where you start earning, things like that. That's what used to happen in the past. I guess that is still happening today, because that's what used to happen in the past. So this network marketing effect is something that you need to be very, very careful about, please.
Okay, thanks. So, Mr. Austin, the summary is that the code word is that if someone is gathering money together for a lot of people, you should by doing that activity, it means that you are supposed to be registered to be able to gather public money together. You can't do it by just your CSE registration. You have to be a member, a regulated as an institution to gather people's money together to invest on their behalf. So whatever name you choose to call it, network, referrals, and all. And like I said, it can be very subtle, but the easiest way for you not to don't even ask any question. You give me a name, I go to SEC website, I check whether the person is registered with SEC. You give me a name, I go to FMAN website, and I check that the person is registered with FMAN. If your name is not featured in any of the two, then it's questionable. I think that's really just to hitting the nail on it. And thank you, Mr. Austin. I think I'll let you go now. We had such an insightful session, but you can drop further question, and I'm sure we'll be able to have access to Mr. Austin's slide after this webinar. Thanks so very much for your time. Thanks for the insights. We're grateful. And we'll move on to our next session.
Thank you very much. Thanks, everybody. All right. Take care. Bye-bye.
All right. Yeah. Bye. Oh, thank you very much. I think we're also very lucky. This webinar is two-phased. We're very lucky to have our regulator. You know, during the course of the conversation, I was mentioning the Securities and Exchange Commission, SEC. They're the umbrella body. They manage fund managers. They manage other capital market operators as well. So, and we're very lucky to have Ms. Fana Chukwuogo on the call with us. She's the Executive Commissioner, Legal and Enforcement for Securities and Exchange Commission. She's going to give us a lot of insights, especially from the regulator's point of view on our discourse this morning on Ponzi scheme and how the recently signed off Investment and Securities Act is helping to address Ponzi scheme in Nigeria. Hello, madam. Are you on the call, ma'am? Dari, I need your help here.
Yes, she is.
Yes, good morning.
Good morning, ma.
Good morning.
Welcome, ma.
Thank you.
Yeah. Could you please put up your video? You might be able to, ma'am.
Unfortunately, I cannot. I'm in
Okay.
France and the
All right, ma'am.
environment is not here, so I would have to
Okay,
just
ma'am.
speak to the slides.
It's fine. It's
So
fine.
good
It's
morning
fine.
and thanks for the opportunity to be able to speak to the participants and the viewers on this very important issue.
Okay, ma. On your slides, ma,
The,
how did
my
you get it shared?
slides are with you to share.
Okay, so Dari, can you help?
Yeah, I'm doing that
Give
right
us a
now.
minute, ma. Yeah,
No,
so just sort that out. So, all right. While Dari is doing that, just to mention to Gloria that I've noted your question and I'll answer. I'll ask it after this section of the webinar. Just to note that I've noted your question. Okay, ma, your slide is up, ma. So we will listening to what you have to tell us. Thank you very much for your time, ma, once again.
all right, thanks, and good morning, everyone. It's very apt that we're looking at the issue of Ponzi today because what Ponzi menace had caused in the Nigerian capital market is something that we have to give every attention to because it takes away um, monies that should be channeled to legal and credible investments into investments that are illegal and thereby are not even oversighted by anyone. So thank you once again. Please, can we go to the next slide? We'll be looking at the definition, characteristics, why the name Ponzi, the notable ones, Ponzi schemes and their impact, how investors can protect themselves, and the powers we have as the Capital Market Regulator under the Investment and Securities Act, and some of the regulatory interventions that we have done so far. Unfortunately, I didn't join from the beginning of the webinar, so I don't know how much of the introductory components of this concept Ponzi that were touched on by the last speaker. But suffice it to say that Ponzi, the way we view it as a regulator, is as defined in the law. Prior to now, the concept of illegal schemes were not specifically captured under the law. But with the ISA 2025, it's now captured and even defined. So if you go to somewhere like section 357, you're going to find prohibited schemes to include those that are commonly known as Ponzi or pyramid schemes. And it further goes down to tell you that any investment scheme that pays existing contributors with funds collected from new contributors to the scheme, or any scheme where participants attempt to make money by recruiting new participants, will be considered a prohibited scheme. And so for this morning, my focus is not going to be on pyramid schemes. I'm just going to focus on Ponzi schemes because pyramid schemes, essentially, most of the underlying components are normally maybe some kinds of goods and services and recruiting people to recruit other people, which is slightly different from Ponzi, which flat out is not based on any productive enterprise. It's just first comers, you bring money. I use your money as a first comer to pay people who are later in time. And no, I use your money as a later in time contributor to pay people who are first in time. And when it's time to pay the later contributors, there's no money. So that's what I'm going to focus on. So what are some of the characteristics? It's interesting that no matter how many times we emphasize this, I find out that what lures people more than anything else to invest their money in an illegal enterprise is the promise of high returns. But you have to ask yourself a simple question. You're promising me a high return. There is the other side of return, which is risk. The higher the return, the higher the risk. So if someone comes up to you and says something will return exponentially high returns, and there's no risk associated with it, you have to pause at that moment and think, what other legitimate enterprise could have gained me that much returns? The second thing is there's really no underlying product or service. It's just the first people who come and bring money, the later people who come in bring money, encourage more people to come in. As the first people who come in are asking for returns, you take money from the people who came after them and pay them off. So there is really absolutely nothing that is based on. And it just, that's why it falls through like a pack of cards, because something that is fundamentally flawed, no structure, no foundation, is going to come apart. So the next characteristics that is quite common is they always encourage people to tell other people to bring in more people. So essentially they need that continuing flow of I hesitate to use this word investor, but I'm going to use it very loosely. They encourage more people to bring in investors into the scheme so that they would have a constant flow of funds with which to use to pay people in case they either want to terminate or they want to get the returns that they were promised. And more than anything else, these sorts of schemes are never registered, because the hallmark of regulation is registration. If you come through to me, one if you come through to me and you want to participate in the capital market, you will not be recognized, you will not be known until you have obtained a registration from the regulator. So no Ponzi scheme as an illegal or prohibited scheme is ever registered by the regulator. They are not known to us. So they are faceless, nameless. They are not known to the regulator because they have not submitted themselves to that process of registration. And let me clarify here that if someone goes to get a certificate of incorporation from the CSC, that in itself does not constitute a registration to seek investment from the public. If someone gets some certificate from a law enforcement agency, either clearing them for certain activities or gets a tax clearance, that does not in itself mean that you are registered with the SEC. So saying this emphasis because no one can conduct investment business if they have not been registered by the SEC. If that investment is public facing, and if that investment has any component of long-term characteristics. Next slide, please. So I'm sure the last speaker must have spoken to why Ponzi. Yes, Ponzi was named after some Italian-American immigrant who duped investors in the 1920s with some postage stamp speculation scheme. It's not because Charles Ponzi, even in history, has been the one that perpetrated the worst Ponzi schemes in terms of volume, but unfortunately, it was the one that popularized it, and so the name has stuck with him infamously. That is why it's called Ponzi. Please, let's go to the next slide. Now, from our perspective or from our records or our enforcement interventions at the SEC, I wanted to just flash so that some viewers can get a sense of the quantum of lost funds that people have forfeited to some of these schemes. So some of the notable ones in the early 1980s and 1990s, they were mana, the plan wells of this world, and it costs investors and the other stakeholders over 100 billion naira. So you can imagine 100 billion naira then and what 100 billion naira will be worth now. In the 2000s, there was the Nospectos, the Galaxies, and Wellstream, about 7 billion. And in 2015 to 2017, MMM, Twinkers, and GHW, about 18 billion, MBA Forex, Chinmark, and Rack Sterling 2018 to 2021, 213 billion. 2020 to 2025, counting down, you now have 1.3 trillion. So it looks like as we are getting more sophisticated as we are advancing in terms of technology, as the world is becoming flat in terms of borders. The amounts are increasing, not just because partly because of the exchange rates and some other related economic issues, but also even in terms of volume. Irrespective of these things, the amount is increasing. So you have the 1.3 trillion. And this is not including the ones that we have to shut down almost on a weekly, daily, and even monthly basis. So they keep popping up, we keep shutting them down. Some of them are not so lucky to be able to make away with any funds. We only get to hear about them after they've made away with a lot of money. Next slide, please. The next slide is also speaking to this same issue. These are some of the additional ones and some of the monies they have cost investors and other people who were connected to the investors. Next slide, please. Now, when someone thinks about Ponzi schemes, the effect of Ponzi schemes, I heard the last speaker, I caught him towards the end of his presentation. For legitimate businesses and those that are registered to carry out those legitimate businesses with the SEC, it takes away a lot of volume that could be invested in legitimate enterprises into the schemes. And it causes a lot of huge losses to the investors with some of the attendant socioeconomic problems. I know someone who contemplated suicide after they had retired and taken all the monies that they had and invested in one of those schemes. I know people who are suffering depression. I know families that have separated on this basis. So it causes a lot of problems. It's just not the monies lost, but there are also a lot of lives that are destroyed because of this. And it also diverts savings and investment from productive to unproductive enterprises. I just spoke to that at the beginning. And it also increases non-performing loans because a lot of people borrow money. Some of them go as far as borrowing money from banks, and they borrow from relatives and they borrow from friends, and they invest it in these scams, and they lose all the money, the principal and the interest that they reinvested, and everything just goes down. So now they can't pay back the people they borrowed money from. The people they borrowed money from had no business with the Ponzi's. They didn't know what their money was going to be used for. And even more concerning to us as regulators is the fact that it has come to my attention once or twice where someone who is legitimately licensed to carry out investment activities in the Nigerian capital market had taken investors' funds and invested it in one of these schemes. It sounds like something that is surreal, but it's true. It has happened. And the other one is that it undermines confidence more than anything else. Some of the investors, only the ones that do not really understand that these schemes are illegal, are the ones I'm speaking to about here. Because if you know that the scheme is illegal and you invest in it, if your money goes, I don't see how that should affect your confidence. It's just that you had greed on a level that you could not curtail, and you decided to take a risk that was not warranted and you lost your money. So that those are not the people I'm speaking to. I'm speaking to the people who genuinely, out of a place of innocence and ignorance, invested and lost their monies. Yes, they would lose confidence in even coming forward and investing in legitimate investment opportunities. Also, for the regulator, whenever one of these things happen, I always look at what people are saying on social media. Yes, they will castigate the regulator and say, what were they doing? How is it that they didn't know? They're not doing their work. They're just leading. But I want to just sound a little word of caution. Most of the people who participate in this phase hide everything they can to make sure the regulator is not aware of it. I would know what you're doing if you were registered by me. I would always surveil and monitor you. But if you go and disguise a scam as a technology business, the only time you get to know that what the people are doing is not technology but investment, an investment scam, is when someone gets burnt. And a lot of times, people who are investing in these things, they hold it very close to their, especially if the returns are phenomenal. They won't tell, they won't speak to the regulator, they would not do any form of due diligence or even say something about something they perceive. They actually want to protect it so that they can earn as much as possible before it goes bust. But it then makes the reputation of the regulator questioned by those who believed that they were investing in genuine investment enterprises. And of course, it takes monies away from the local economy. Look at what happened in the CBEX case. They all used crypto to move the money. And now tracking or tracing the money becomes very complex and very problematic because international enforcement is a web. And before you finish negotiating it and getting to the bottom of where the assets are, some of these assets are so liquid, and I hate to use the word, they are evanescent. It's like vanishing like spirit. It's so difficult to trace. To the next slide, please. Please, can you move to the next slide? Can anyone hear me?
Yes, ma'am. Dara, can you please move? Yeah, it's on next slide now.
All right. So this is a slide I consider very important. Why is it important? Because if investors can protect themselves or can help in the fight against Ponzi, there will not be any Ponzi scheme. A Ponzi requires someone who's making a pitch and someone who is actually receiving that pitch. If you come to me and you make a pitch for me to make an investment, and I get very skeptical and I ask all the right questions and I do all the due diligence and I find out that I'm not comfortable with what you're offering and I don't invest, you are not going to find an uptaker. And so when you have a product that you cannot sell, there cannot be any prosperity, there cannot be any expansion. So it's important for investors to protect themselves by one, if someone walks up to you and makes you an offer, you need to be skeptical. Is your money? I haven't seen anyone who is in a hurry to lose their hard-earned money. You need to show some skepticism. You need to really, really consider what the people are telling you. Make all the inquiries you need to make. And you need to check the status of that promoter with the SEC. Is this a registered capital market operator? But it doesn't stop there. Even when a registered capital market operator offers you something, it's important for you to know whether that product is actually approved by the SEC. So please always go on our website. The fund managers also offered you some link where you can go and check for those that are registered by the SEC. Please check all these things before you invest your money. Understand what someone is offering you. No one should use jargon. Nobody should use technical terms just to intimidate you. And you think, oh my God, if I ask questions, it will seem like I'm very, very dumb. I'm not knowledgeable. No, ask is your money. Ask all the questions. If you cannot understand what someone is telling to you, that's why you have registered professionals who can help you. Go to your brokers, go to your fund managers, go to anyone at all, and they will direct you to that specific capital market intermediary that can give you the information and the understanding that you need before you invest. And please, we keep on appealing. Whenever you see anything, say something. Don't say, oh, I know this may not look right, but hey, why would I speak to the SEC? Speak to us, because when you invest and you encourage others to invest, they are likely going to lose the money. And when you lose the money, it's not at that point you now come to the SEC to ask us to start running after something that probably has already vanished when you were covering up and helping the people to keep it a secret, a very well closely guarded secret, so that you can benefit as much as possible. And I always want to emphasize, we cannot emphasize enough that asking questions is important. Reading up things for yourself is important. Checking the SEC website is important. Seeking professional advice is important. Ask questions, check, check again, and ask again. Don't ever be in a hurry to invest or lose your money. Don't let anybody make you feel that there's something you're missing by not immediately investing. And if anyone is doing rush sales for an investment, you need to be careful and immediately be cautious. Let your antenna go up that something may be fundamentally wrong. So that's enough. And we, on our own part, we will do our best to partner with the market to educate the public as much as we can so that we saturate the public with knowledge and information. And anyone who goes out to go and put their money in this enterprise would not say it's from a place of ignorance, but we would know it's a choice the person has made and it will have consequences. Next slide, please.
Sarah, can you move the slide? All right.
Okay, so like I said at the introductory part, I had mentioned that in the Investment and Securities Act 2007, there were no express provisions on Ponzi's and other illegal schemes. So we were relying on the all-powerful Section 13 that captured everything, our functions, our powers, our objectives, and on those general powers, that is how we were moving on Ponzi's. But whenever there was an issue and it showed up before the courts of law, some people actually challenged our authority to enter and seal up their premises, to go and seek orders to freeze some of these assets to make sure they are preserved pending the investigation. But luckily, when the Investment and Securities Act 2025 came into law, Section 357 clearly defines what the schemes are, and so many other sections that prohibits it specifically and directly, especially in the areas of collective investment schemes. So now the law is not silent on it. The law is actually prescriptive on it. And to that extent, consequences have already been spelled out, and delineation has happened with the provisions of the Investment and Securities Act 2025. Section 196 of that act empowers the Commission to enter and seal all prohibited schemes. So it means we have the power to come onto a premises and seal it off. And the business, as anyone knows it, will cease, and no one can have access to that property until we have finished with both the criminal and civil processes that are required. Also, the expenses that the Commission would incur in doing all these things, the law now permits them to be able to recover those administrative costs from the assets of the fund. Because what used to happen is SEC would come, incur all of the costs for trying to recover funds from all these illegal schemes, and then try to get to see what the investors can get, do the court processes, do the ones that require other law enforcement agencies to come on board, foot all the bill. But the law has made it now permissible for the SEC to be able to offset those costs from the assets of the scheme itself. Then the one I love the most is what the ISS says: when you promote an illegal scheme, when you facilitate an illegal scheme, when we take you up and we find out that it truly is an illegal scheme, when you're convicted, the minimum fine that you will get is 20 million minimum. So there's no ceiling. And it will be staggered, and it will be decided and determined based on the scale of the fraud that you have perpetrated and the impact it has had on the system. And the other one is an imprisonment of a term of 10 years, still a minimum. not maximum, or both. So it's a very serious crime for someone to actually operate an illegal scheme the way it starts. But I want to sound a little warning because I saw a very interesting stakeholder group for this webinar, the influencers. I just wanted to put it out there that please, when you are promoting any scheme, before you promote a scheme, please check that that scheme is registered. If you promote an unregistered scheme, when we go after the scheme, we will go after you as an influencer, because it's your responsibility to do the due diligence that is required to ensure that what you're promoting is legal. If it's an illegal scheme and we come after that scheme, the promoters, the influencers, the facilitators, including those that I don't know whether to call it conscript or entice or deceive to sell these products on their behalf. So the foot soldiers, everybody will be dragged into the prosecution. And it's a very steep year term of jail term, 10 years minimum, and very steep fine of 20 million minimum. Next slide, please. Please, can we go to the next slide, please?
Derek, can you move to the next slide?
I'm on the next slide already. This slide is speaking to what we have done as the Securities and Exchange Commission. So we worked really hard to make sure that in the new law, all these illegal schemes will be criminalized. Please, can you move back? Yes, thank you. And of course, that we now can obtain directly on our own cease and desist orders, and we can freeze bank accounts. And we also now have a fiat from the Attorney General's office that allows us to prosecute these cases on our own. Before, we had to go through the prosecutors in the Attorney General's office, but now we as the SEC can use our staff to prosecute these cases, our lawyers to prosecute these cases. And of course, we have the power to seal off premises, and we are collaborating even more than anything else now with the law enforcement agencies, the EFCCs of this world, the NFIU, and the police, the cyber crimes unit. We are collaborating with everybody, because what we have noticed also is that the Ponzi schemes are moving away from your regular come, sit down, speak with you, invite you to invest. Most of them are now being perpetrated online. And because online activities are very, very complex, and it cuts across the jurisdiction of so many regulators, we have to all collaborate to be able to effectively and efficiently monitor what these people are doing online. The stronger interagency coordination, we have a platform where the financial sector regulators sit and meet. We actually had one that the CBN was chairing at some time when Nospecto came on board. That subcommittee of FSRCC was very, very instrumental in nipping that scheme and making sure that more people were not defrauded. And some of you may have seen some of our activities, the outreaches we are doing. We're even doing some of them in collaboration with some of the market operators. Going to markets, going to churches, to mosques, to schools, going to everywhere where there's an aggregation of potential investors, taking it even to the grassroots, to the villages. We want everybody to hear and know that there's a way to legitimately make an investment. And so when people come to you any other way that is not that way, you should say no, and you should not invest your money. Why is this key? It is key because we want to bring everybody on board to know what they can or cannot invest in. Because a time would come when we know that we have done the outreaches and we are saturated every corner. We would move on to requiring some level of due diligence from the investors themselves. Because if you know that what you're doing is not permitted under the law, there has to be some consequences to you. There's a very popular Ponzi scheme, the Madoff scheme in the US, and the one way they were able to recover all the monies for every other investor that came later in time was the cost for those excessive profits that the earlier investors got to be disgorged. It didn't matter how long ago they took the money, they forced everybody to return the monies. They returned the monies and they used it to offset the investors. So this is something that we're looking to do in no distant future. So it's important as we do this seminar, webinar, that everyone who is a stakeholder, whether you are in the media, whether you're a capital market operator, whether you're an investor, all of us should really come together on this, because a time will come that everyone that is involved, whether on the buy side or sell side or give side or take side, you would have something to suffer for breaking the law. So that is where we stand with the investor education. And we are also focusing on some of the red flag awareness. So we are teaching people to spot some of these signs on their own. It's part of the wider outreach program. We're also using the young people, the coppers, the students to just, if you see something, snap it, send it to the SDC. You see something, you say something. And also, we're doing real-time monitoring and surveillance of digital platforms and fintech operators. Of course, relying also on some of our law enforcement agencies, because some of them have a more wider reach or coverage of some of these issues. So we're all collaborating on the monitoring and the surveillance. And finally, the publication of registered capital market operators on our website is one simple way that helps anyone to just look. Take that 5 minutes, 10 minutes, just log on to our website and see for yourself whether this person that is presenting themselves as a legitimate scheme is registered by the SEC or not. So I would stop here, because I think that that's all the time we have, and all the time we have, and what I can speak to within that time. So thank you very much for listening. And my parting words in conclusion are: we all have a responsibility as stakeholders to do our part. Everything cannot be just the regulator, because what we can do may sometimes be limited, especially if the people who invest in Ponzi schemes are doing it knowingly, but they are hoping, okay, I will go in, and once I go in, I'm going to be okay. I will get out quickly before the scheme will crumble. But not always, all the time, are people that smart. One day it's going to catch you. If it doesn't catch you, it will catch your relative. It may even catch someone who is so dear to you, like your auntie that has worked all her life, and all the investment savings, someone just takes it. Your auntie will suddenly become your responsibility. So please, let us all come on board together. The capital market operators, I also use this platform to appeal that you will partner with us, especially in all these outreaches and in educating the public, because it's to your own benefit as well. Money is not invested in Ponzi's, and monies that will be invested in legitimate schemes that have been run by you. Please, if you see something, say something. And if it's something appears to anyone to offer returns that are too good to be true, it probably is absolutely too good to be true.
Hey,
Thank you
fans.
so much for listening, and thank you for the opportunity to speak on this issue.
Thank you very much. It was a very insightful session, and we're grateful for your presence. Thank you for honoring us with your presence. We have one or two questions, and I know you've addressed them, but I can run through. I know Gloria asked earlier on. I know you mentioned during the course of your presentation to say that if it's possible for operators that are registered under SEC still be involved in Ponzi scheme? I know you had mentioned that um, it's possible that there were times when during your inspection you had noted one of registered operator, but I don't know if you want to speak to that. If it's possible for a
Okay.
registered operator of a SEC,
Yes.
yeah.
It is. I just want us to separate two issues. There are two concepts of registration: registering an entity, registering the key officers or the sponsored individuals, registering even a platform that is being used by that operator, and registering a product or a scheme. So I can register you as a capital market operator. I can register you as a fund manager, for instance. But the products that you offer are also products that you send through to the SEC for us to be aware, for us to give you no objection. So a legitimate capital market operator can run an illegitimate scheme. So you're registered as a capital market operator, but that particular scheme you're running or that product may not be a registered product. And so for that reason, that product is not, it will be considered, if it has the characteristics that we have outlined for a Ponzi, yeah, a legitimate capital market operator can run a Ponzi scheme. And a legitimate capital market operator may not run a Ponzi scheme, but can facilitate a Ponzi scheme. Some of the capital market operators who have platforms, maybe platforms that people can use for investment, can actually offer it to a Ponzi scheme knowingly or unknowingly. But also, a registered capital market operator can actually take legitimate funds that were given by investors, believing that those monies were being invested in a scheme that was approved, and invest it in a Ponzi scheme. So these are very different angles. So when one thinks Ponzi, don't just think Ponzi from the perspective of some unregistered operator, unregistered scheme, everything about it unregistered. A part of it may be registered, but the scheme itself may not be registered. And so I also want to differentiate. Every unregistered scheme is not a Ponzi scheme, but every unregistered scheme is an illegal scheme. A scheme becomes a Ponzi scheme when it has the characteristics, nothing, no underlying investment, nothing. There's nothing that is based on. It's just come and bring in your money, then bring more people. The more people that come, the more I have money to pay the first people, and so on and so forth, until everybody says, I want my money back. And then you find out that there's really nothing that they're investing, no returns whatsoever. The returns that they always put forward are monies that are brought in by later investors. No returns. So every Ponzi scheme is an illegal scheme, but every illegal scheme is not a Ponzi scheme. Thank you.
Thank you very much for that insight. Let's just one more thing before we let you go. I want to read out Chukwemeka Ume's commentary in the Q&A section. And he mentioned, I'm reading straight from him now. My interest is on registered capital market operator who invest in fraudulent schemes knowingly and unknowingly. What's the consequences? What role does SEC play to ensure investors get their funds? Who is liable? What is the process? Is the punishment the same with illegal operators? What's the time it takes for successful resolution? I'm just reading from him verbatim. I don't know if you can make commentary on that, ma'am.
Okay, so I wanted to touch on all the components because these are really many critical points in one question. So you can just still leave it. It says his interest is in registered capital market operators who invest in fraudulent schemes, knowingly or unknowingly. So let's start from that one, and I'll take the state of what he has spoken to. So whether there's no unknowing, there cannot be an unknowing. That unknowing part, I want him to remove it. If you're a registered capital market operator and you tell me that you invested in a Ponzi scheme unknowingly, how did that unknowing come? You that has the highest level of financial literacy, or supposedly have the highest level of financial literacy, you would not do the basic due diligence that you're requiring other people to do and invest in something, it cannot be unknowing. It is knowing. I would not even impute negligence in this matter. I would impute knowledge. I would impute intention. So for me, there's no unknowing. A registered capital market operator cannot unknowingly. That's number one. Number two, what are the consequences? If you're a registered capital market operator and you invest investors' monies in a Ponzi scheme, that's one scenario. If you invest investors' money in a Ponzi scheme, you will become a facilitator, like I just pointed out. And what the new law is saying is that all the facilitators and the promoters, they get the same day in court. If you are found culpable, you're going to go the same way as if you actually promoted that scheme yourself. Because you facilitated it, it's a facilitation. So that is the consequence. The consequence is as prescribed in the law. You will be considered a facilitator in that regard. And of course, naturally, if those things eventually befall you, chances are you would also lose your license for even making such inroad into a prohibited place under the law. So the other one is who is liable and what is the process. Like I said, the liability will fall on all the promoters and all the facilitators. Anyone who can be considered a promoter or a facilitator in that regard will be liable. Then so the liability also has another component, because I'm sure he's talking about the investors' money who thought they were investing with a legitimate capital market operator in a legitimate scheme, but only found out that their monies actually were invested either in a Ponzi. Because the operator is registered with us, it's our responsibility to monitor, to supervise, to inspect the books, both from what they file and from the visits that we make to their actual business places to look at their books. If such a thing happens, the investors under that qualify to claim from the Investor Protection Fund, the Nigerian Investor Protection Fund, because these are some of the issues that are covered and are claimable, are possible for them to claim under. You're a legitimate capital market operator, you involve yourself in an illegitimate scheme, the investors in that scheme should be able to claim under the Investor Protection Fund. So I don't know whether that has covered all that he has asked, or is there any other angle?
I think it's covered, even though so what time it takes for successful resolution, I guess that can be, you follow the order of the courts.
Yes, because I was going to find. Yes. So when you ask for what time, it's not completely under our control. First, we'll start from when you became aware of that malfeasance.
Yeah.
Then you have to go and seek orders, because wherever money is involved, you cannot deal in monies without getting a court order. You're not in a position to take control of assets that do not belong to you until you've gone through a process as prescribed by law. So that time will be determined by all of those things.
Yeah. I think, thanks a lot. I think I will answer one last question before we let you go. So I'm reading from one of our listeners, Lebron Musa. Apart from raise alarm approach by investors, is there any internal mechanism put in place by SEC to identify Ponzi scheme?
So I don't know what he means by internal mechanisms. We have a full investigation and enforcement department, and we have a monitoring department. The monitoring department, they do surveillance. They are the ones who look around, but when they are looking at registered capital market operators majorly. So they are looking to make sure that those ones are doing what their license permits them to do and do not go outside of the licensed activities. The enforcement and investigations, they're relying on intel. We share intel with fellow regulators. We use even just regular citizens like himself to give us information that we need, because there is no way it's possible for a regulator to know that one man had taken one room in Onitsha and from that room is operating an illegal scheme. It's only when somebody writes, how would you even know the person exists? It's only intelligence, so we rely on intel. We encourage, even when we go to the markets, we encourage their heads, we encourage even the market participants themselves to just let us know once they see. If anybody walks up to you and starts that kind of conversation, let us know about it. That is what we've been doing. So those are some of the mechanisms. And when it comes to those ones that are doing all these frauds online, we are using all the law enforcement agencies, even the Office of the Security Advisor, all of them, NCC, everybody is on board. Even CSC, before you register, look at the object clause, see what the people says they are doing. If it even remotely resembles investment, let us know so that we can keep an eye and know what the person is doing and see whether the person comes forward to register. Those who have access to just go and look at websites and look at web addresses, as many as we find, we will talk to them and they shut them down. So if that's what he means by mechanisms, yes, those are there. But more than anything else, he that asked this question is also our eyes and our ears. Those who are social media influencers, those who live on social media and see everything. We're on social media just like everybody else, tracking, doing mystery shopping activities just to pull them out and to know what these people are doing.
Thank you very much. I think it's very insightful session. I think I like a lot of perspective that we can miss out as members of public or even operators as well. And I took a lot of notes while you were talking, and it's commendable. And I had mentioned earlier that I remember one of the times that the DG even had to go into the market proper and the entire staff of Security and Exchange Commission to just enlighten people. I know we also do go to even secondary school. We run even quizzes so that even from teenage years, you start educating people with the right knowledge so that they would not miss it even when they start earning money on getting into the wrong scheme. I think as much as possible to increase the publicity much more than you would typically see a Ponzi scheme, because some of the things they do is also sort of like get in everybody's faces, increase visibility much more than the good schemes, and that's what we're trying to also match and also exceed as well. I know that you also mentioned things around when there's some form of rush sale, you should be wary. Why would anybody want to quickly sell something to you in a hurry? I won't give you ample time to check if the operator is registered, if the scheme that they are trying to sell to you is registered, if the product is registered, because those are different levels of the things we also have to check. And I also appreciate your mention around influencers as well. And as it is, we all are influencers. For every one of us in this call, for some way, the knowledge we've gathered here, we can influence our immediate environment on how they can recognize Ponzi scheme, how they can check even if they're unsure on Ponzi scheme, and sort of like look out for activities of either Security and Exchange Commission or even from Media Association of Nigeria, and see what we're doing to do some level of check or when you're not even sure of what to do. And because we're also on social media, I think we are DMs away as it is. I know my colleague in the secretariat have posted our social media handles and where you can follow through and see some of these things. This enlightenment is done regularly. We would, if another yesterday, prior to the knowledge of the public holiday, we had organized a radio station, and we just not even not limited to Lagos only, where we have a lot of people. We even going deep down. On yesterday, we were on Kaduna Radio. Sometimes ago, we were on Enugu Radio. Sometimes ago, we were on Ibadan Radio. So we're all some of those events and sessions is just to ensure that the entire country is covered, and where people will typically go to sell this Ponzi scheme to the unknown or not very literate people. We are covering it. I think that's really it. And like I mentioned, on the chat room, you see our various social media channels, the one you're very comfortable with, where you can follow us and see some of those conversations because they really never end. We just want to be as smart as possible in the face of everybody, more than the bad schemes or the Ponzi schemes that we have in the market. And that's what we're doing. What is the reason for this webinar and subsequent webinar that we'll host at Fund Managers Association of Nigeria, as well as Securities and Exchange Commission. Thank you very much, Ma. We appreciate your timing. Despite the way you are, and even to possibly present that, I think it was really an insightful session. I took a lot of notes and it's helpful in my conversation to people around me, my firm, as well as to investors. I don't know if the executives. Thank you, Ma. Thank you. I don't know if the executive secretary of FMAN is on the call, Laura.
She's not.
Okay.
Perhaps you can close
Okay, I think I'll just do the closing. On her behalf, Laura is the executive secretary of the Fund Managers Association of Nigeria, and also an operator in fund management industry. So just want to thank everyone on the call. I'm sure we will reach out to you. We have your details as following your registration. We can also reach out to us via all of our social media pages that we've dropped on the chat box. I think we are on almost everywhere. We're on TikTok. We're on TikTok. We're on LinkedIn. We're on Facebook. We're on Threads. We're on X. We're on IG. So you can just follow us, and you'll see a lot of conversation we hold around investments, investing. Maybe we might just visit your locality very soon. So we go around the entire country to preach the gospel of investing and right investing, and also try to avoid the schemes that are not properly registered with the Securities and Exchange Commission. Thank you very much for your time, and we look forward to seeing you at the next webinar. Darid, any other parting words from you?
No, thank you.
Thank you very much. Enjoy the rest of your day. Have a good afternoon. Bye.